Okay, so I make it 10 o'clock now, so it's time for us to start. So thank you all for joining us on this webinar this morning. I estimate it's going to take about 15 to 20 minutes to go through it all. Just a very little bit of housekeeping before we start. Everybody is in listen-only mode, just to make background noise and all that type of stuff. Feel free to ask questions. Put the questions into the chat box. What I'm going to do is I'm going to go through the content and then we're going to have some questions and answers at the end. So if you've got any questions that you want answering as we go through the content, please pop them in the chat box and I'll have a look at the chat box towards the end and we'll answer your questions as they're raised. So what are we going to talk about this morning? We're going to try and get the slides to move on, would be the first thing. So what we're going to talk about this morning, we're going to talk about making tax digital, obviously. First of all, we're going to talk about the background, why this is happening, what HMRC are hoping to achieve out of it. We'll then want to look at exactly how it will work, what it means for you. We'll look at what you can and can't do going forward. There are some changes that most people will have to implement. Some people will be 95% the way there with making tax digital. Some people will have quite a step change to make. We'll look at the processes that you need to follow. We'll look at some do's and don'ts, and then we'll talk about what the next steps are going to be in the process, timescales, etc. So why are we doing this? This is an HMRC-driven project. HMRC believe that, well, HMRC's ambition is to be the most advanced tax system in the world. And they believe to do that, we have to be completely digital to achieve that world-class, world-leading tax collection system. They believe that their system will make everything more efficient and more effective, and it'll also make it easier for taxpayers to get their tax right. So they've talked quite a lot about reducing errors, particularly starting off with VAT returns. They estimate that they're losing around £9 billion a year through errors made in submitting VAT returns. Now, the only example they've given us of an error in a VAT return is an addition error. And I sort of find it a little bit hard to believe, if I'm honest, that they think that there's £9 billion worth of addition errors in VAT returns kicking around. That's their view. We're starting off making tax digital will cover all taxes eventually, so income tax, corporation tax, PAYE and everything else. Those systems will all change at some point in the future. They've talked about bringing all those in 2020, but I suspect it depends on how successful the VAT system is that they're bringing in this year, in 2019. What will happen is they'll be doing away with all the government gateway stuff and different sign-ons for different taxes. You will have a personal digital account, and that will contain details of all your taxes. Everything will be in there all in one place, which isn't a bad thing. But they will be looking to collect information in a slightly different way, which may be a good thing, it may not be a good thing. As I said, the first tax that they're starting to look at with this system is VAT. And excuse me, the people that this first affects are all VAT registered businesses with a turnover greater than £85,000. So VAT registered businesses with turnovers of less than £85,000 aren't affected immediately, but are likely to be affected later on in the year. So if you've got a business and you're turning over more than 85,000 and you're VAT registered, this is going to be affecting you in the next 3 months. It covers VAT periods that begin on the 1st of April or later. So all VAT periods that end up to the 31st of March will be treated under the old system. All VAT periods that start on the 1st of April will start on the new system. And any businesses that are under £85,000 but are VAT registered will be included in the scheme later. The date that they're talking about at the moment is October, although they've not been entirely clear about that, and I suspect that will be, whether that October date is hit or not, will depend on the success, again, of what we do in April. So just for some absolute clarity over your dates, I'll move that out of the way so you can read that bit. Clarity on dates. If your next quarter end is the 31st of March, the first quarter end that you're going to be preparing things under Making Tax Digital will be the 30th of June, and your first VAT return submission will be the 31st of July. If your next quarter end is the 30th of April, which probably means that you're just about to come up to your next quarter end as being the 31st of Jan. So your next quarter end after this one is 30th of April. The first quarter end that you have to complete Making Tax Digital returns is the 31st of July, and that will be then due in by 31st of August. And if you have a VAT return quarter end, that is the 31st of May, your first quarter end under Making Tax Digital will be the 31st of August when you make your first return, and that will be due in by the 30th of September. Now, please note, these are quarter end dates, not the dates that you're submitting the returns. So quarter end 31st of March, you will submit a return by the 30th of April. Quarter end 30th of April, you'll be submitting by the 31st of May. So don't confuse the quarter end date with the date that you're actually submitting the return, which is a month later. So how will it work? Essentially and basically, all returns will now be submitted digitally using APIs. So for those of you who know anything about software and APIs, for me, I understand it as been a little link between two bits of software that enables softwares to talk to each other and sends data between two bits and pieces. So VAT returns will no longer be allowed to be touched by human hands once initial data is put into that VAT return. So, for example, if you're using spreadsheets currently to prepare your records, it's okay to continue using spreadsheets. However, no rekeying will be allowed to take the information from your spreadsheet and put it into the VAT return. You're going to have to invest in something called bridging software. And bridging software will interrogate your spreadsheet, pull the data out, and then we'll send the data on to HMRC. Now, I said a few minutes ago that HMRC were convinced that this method would reduce addition errors. Personally, I would think that most addition errors that occur in VAT returns that are done on spreadsheets is actually adding up the columns of numbers, not moving the numbers from the spreadsheet into the HMRC portal. So I'm not quite sure how having bridging software will achieve their objective, but that's what they're claiming. So that's how it will work. Put data into a spreadsheet, you'll then need a bridging piece of software to interrogate the spreadsheet, pull the data out and submit it to HMRC. Manual bookkeeping will no longer be allowed. So anybody at the moment who is keeping manual books and records, I'm afraid they have to go, and you will have to move on to some sort of cloud-based accounting software very, very, very soon. And the idea is that from entering core data into your system all the way through to the data arriving at HMRC, the process is completely seamless. It's done by human hands. Now, for a large, for a large number of our customers who are using Xero or maybe in Cashflow or Free Agent, you've probably got most of that there anyway. You're probably doing most of those things, but we do have some customers who are preparing VAT returns in the software and then they're rekeying the numbers from the software on the HMRC portal, and that will not be allowed under Making Tax Digital. So, as I say, we have customers who are using Xero on the call this morning. We have customers on Free Agent and customers on Cashflow. You guys, you've probably got the basics of probably 90% of your system already done, dusted and working as it should do. I'm going to come on to some do's and don'ts about the way that you're keeping your books and records, and you may just need to tighten up on one or two bits and pieces in those. But for the most part, you've got a system that will be Making Tax Digital compliant. What you'll have to do is prepare your books in your software, and then at the end of each quarter, prepare the VAT return on the software and press submit, and that will then send the data through the API into HMRC. All three, Xero, Cashflow and Free Agent, have all confirmed that they will be or are already Making Tax Digital compliant. Xero are ahead of the curve. They've been there for a few months now. Free Agent as well, they've been ready for a while. Cashflow are saying that they will be. Not too sure on Sage Online at the that's one where we haven't got any real clarity over it. But if you're using one of those software, you can relax a little bit, knowing that actually you're pretty well covered, that your basics are already there. If you're on spreadsheets or manual records, then we will be talking to you separately about what you may choose to do going forward, whether you move from those onto this software or whether we put bridging software in. And if you're on manual records at the moment, then we'd be putting you up to one of these packages, but it'd be zero. If we do the bookkeeping for you, you don't have to worry because we do it all on Xero anyway. So everything's already Making Tax Digital compliant, and you can move forward quite happily that way. As I said, from the date of that first Making Tax Digital return that you have to put through to HMRC, the old HMRC Online Services portal that you may have logged onto before and keyed your VAT return details in is no longer available. It will be open to those who still qualify for submitting VAT returns in that way. So the ones who are turning over less than 85 grand will still be able to get into HMRC Online Services. However, once you go into Making Tax Digital, that's it. Your portal is closed. You can no longer get into it. You have to do everything through this digital account. So what gets submitted? Well, to start off with, HMRC are only collecting the same amount of information that is currently on your VAT return. So just the 9 boxes. There is talk, however, and I can see this being real, is that in the future, they'll start to collect more and more data from your system. The data is there, they will want access to it. And that probably means that they will be drilling down and looking at each individual transaction that is in your bookkeeping system at some point in the future. They've already said that data has to be input in a certain way, of which most people are doing that anyway. However, because they're being prescriptive about it, I can only see it being that that's where they wanted to go with it. They want to start looking at the audit trails. If you're already a Xero customer, you'll know when you run your VAT return, there is another report you can run called a VAT audit trail. And if you look at that VAT audit trail, I think that's what they're going to start collecting, which will show each individual transaction, each individual sale, each individual purchase, and every single bank transaction that's going through that's included in that VAT return. So they've been very prescriptive and said that for each sale, you've got to include on the transaction as you enter it into your bookkeeping software, the time of the supply, the value of the supply, and the rate of VAT charged. For those who run invoicing systems, that's not an issue because you include all that anyway as you're raising the invoice. You might not include the time of supply on there. You'd include the invoice date, but you might not put, I'm invoicing you on the 1st of February for work done on the 15th of January. So there's a bit of, you might just need something going into the references at some point in the future, although they're a little bit ambiguous about that at the moment. Purchases, so for every purchase you make, they'll want when you made the purchase, they'll want the value of that supply, including the VAT that's not claimable. So if there is an element on VAT that's not claimable, they'll want you to include that within the return. So that could be, for example, on a car lease where you can only claim half the VAT. They'll want to see that split out, so they'll want to see how much VAT you're claiming and not claiming on that transaction. They'll obviously want to see the amount of VAT you're claiming for each purchase. However, they have made it very clear at the moment that they've no plans to see individual receipts. So whilst you have to have a lot of detail in your accounting system about each transaction, there is no requirement to actually store and keep your receipts digitally. If we do your bookkeeping, we do store them digitally, and a lot of you guys are already using tools like Receipt Bank as well to help store your receipts digitally. But there is no requirement, and HMRC will not see those receipts. They will only see the transaction that you enter into your bookkeeping system. So that helps, but I think what they're wanting to do is when they get to the point where they can see the audit trails is they have some interrogating software that they currently run during a VAT investigation, and they can look at individual transactions and they can look for patterns, and they can look for things where they wouldn't expect VAT to be charged and you may have claimed it back. And I think there'll be an increase in automated VAT investigations into individual returns at some point in the future, maybe in a couple of years' time. I do think that's where this is ultimately getting. Let's collect lots of data and ask lots of questions about that data. At the moment, they've said if they want to look at the data, they have to ask us in writing to be able to see that. But that I can't see that lasting. There's no reason for collecting and insisting that you do things in this manner unless they're wanting to see that data at some point in the future. So forewarned is forearmed, I think. So some do's and don'ts. This is really coming on to actually looking at your processes behind the scenes. So we know everything's got to be in MTD compatible software. However, that there is this data behind it and making sure that everything's tight. So even at the moment that they're only looking at 9 numbers, I think it's a really good idea that if there's something not right in your finance processes, that we tackle that now and get ready for when they are wanting to see those VAT audit trails and the more data. So we need to make sure those bookkeeping processes are tight. We do have customers who are only updating their records when the VAT return is due. So maybe a week before the VAT return is due, they're updating their zero cash flow. I think that's not a very good idea for a couple of reasons. First of all, from a Making Tax Digital perspective, leaving your books for a quarter means that you're less likely to have found the receipt that goes with the transaction. It also means that you're less likely to remember what you spent money on, and that probably does increase the chances of you getting it wrong with your VAT reclaim. The second reason that I would always insist you do your bookkeeping much more regularly than once a quarter is that, you know what, when you've got up-to-date numbers in a tool like Xero Cash Flow, you're more on top of your business. You know exactly where you are in terms of profitability as you're running through the year. It makes it easier for us to predict your tax bills. It makes it better for you to be able to make informed decisions. So there are so many business reasons why you should keep that bookkeeping more up to date than once a quarter. But I think if we're looking specifically this morning at Making Tax Digital, leaving it till once a quarter really means that the likelihood of you putting an error in there, and as a result of putting an error in, you then get an automated investigation triggered, it's going to increase, even if it's only by a couple of percent. Make sure you're recording each individual transaction with the correct rate of VAT on it. So if you're doing your own bookkeeping, just make sure you're not claiming VAT back on things that shouldn't have VAT on. Common errors we see are things like people have claimed VAT on rent back before, when rent is only VATable under certain circumstances. So a lot of people are paying rent and it's not VATable. I've even seen in the past people claim VAT on the VAT payment or VAT on wages and things like that. So just be really, really careful that you're going through and recording each individual transaction and you're getting the VAT right. Keep your receipts. If we do your bookkeeping, you'll already know that we sort of say we're not claiming the VAT back unless you've got the receipt. And that is the right way to do it, and it's the way that you've got to do it. Keep your receipts, and then if there's any one of these investigations triggered, you know that you've got backup documentation to prove that that transaction that you've put in is right. And make sure you reconcile everything from the bank, including the non-VATable stuff. At the moment, you can get away with just doing your bank reg on the things that you need to claim the VAT back on to submit for your VAT return. Once they start seeing the audit trail, they're going to want to see the non-VATable stuff as well as the VATable stuff. So make sure that everything in that bank account is reconciled at the end of each month and the end of each quarter before you submit the VAT return. There are some specific stuff that only apply to a small number of our customers. They're mainly the ones who that don't raise sales invoices and deal in cash, or there's some very specific VAT schemes that a few of our customers are involved in. We will be picking those up with you separately because some of it might be quite complicated, and we don't want everybody. We don't want to have to talk everybody through something that only affects one or two clients. We currently have a VAT review service that we do automatically for every single one of our bookkeeping clients. So when we're doing the bookkeeping at the end of each quarter, we do a VAT return review before we submit the VAT return. We're going to roll that out and offer that as a standalone service going forward. We've just got to just write in the system for how it would work. And we'll let you know that if you want to have your VAT return checked before it goes into HMRC, that will be an available service from us in the very near future. So that's everything at the moment. Sorry, it's not, we missed one out. We were going to talk about next steps. There we go, next steps. So what happens next? Where do you go from here? Well, HMRC haven't yet issued exactly how and when it would be best to sign up for a Making Tax Digital account. They have told us as agents that we can transport all your accounts across into digital tax accounts with us, but they haven't said whether that gives you your individual access or not. So it's a little bit unclear. So our next step is to work out exactly what's going to happen with setting up these new digital accounts, letting you know any action steps that you need to take to get a digital account. Keep your eye on your inboxes. First of all, for those who need specific instructions, we'll be in touch with you. For those who need more help and more work done on your accounting system to get it up to date, we'll be in touch with you. And we'll be sending out regular emails over the next couple of months on exactly how the project is progressing as far as we understand it, as far as we know, and making sure that you're all ready for that first Making Tax Digital VAT return. For a lot of people, there'll be very, very little change to the processes that you do now, and you'll notice nothing. For some people, there'll be a massive change, and then for everybody else in between, there'll be bits and pieces that need changing as we go through it. So that's everything I wanted to talk about this morning. We're now on to questions, and I do have some questions in the chat box. So if you just bear with me for a couple of moments, and I'll start going through the questions. So the first one was, is that 85k turnover for just last tax year or over a period of years? It's for your last preceding 12 months. So if you're over that in the preceding 12 months up till the 31st of March, then you are in as being over 85,000. Next question from Emma. Around submitting your first MTD VAT return. No, the process will be exactly the same, Emma, as it is now. So we will be submitting it on your behalf just as we do now. There'll be no difference there. And you've talked there as well, Emma, about storing invoices and receipts as hard copies. And we want to talk about software. Yeah, we'll send you some software links afterwards. For personal expenses that put through months in arrears, often after a quarter end, how will this be affected? Some directors tend to do a few months worth of expenses in one go. Yeah, at the moment, there's no change. It's the way directors run businesses. I think that will still be okay under Making Tax. In fact, sorry, certainly in the first tranche of Making Tax Digital, that will be absolutely fine to continue to do that. If that changes at some point in the future, I will let you know. But I think it's safe to say that you're okay to carry on doing exactly what you're doing in terms of directors putting expenses in a few months in arrears. Question from Ellis. If you can't access the portal, how will we submit EC sales? We'll need to tag those in Xero, Ellis. So there is a way of tagging them in Xero before you get there, so it will actually show those up on your VAT return as you submit it. I'll show you how to do that. No more questions from anybody. I think we're covered on all the questions there. Just 30 seconds, just in case anybody's typing anything else. No? Okay, right. In that case, thank you very much, everybody, for coming. I make it 10:25. We'll be putting a recording of this webinar. We'll make it available to everybody and email everybody as soon as we've got the recording available. And any questions, feel free to send us an email and just check your inboxes regularly just to watch out for stuff that we'll be sending out over the next few weeks. So thank you, and Speak to you all soon.